Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code or clicking on the link in the description.
The dollar is screaming higher. The dollar makes the weather, and its rate of change determines its severity. All right, so see my write-up I just posted, not the hold on tight, that was definitely on Monday. And here it is. We've got a Trump win. So it's a mixed bag. And I don't just mean for those emotionally who were committed to Harris or who really, really are disappointed or worried. This is a mixed bag that the analysis, right, that I did predict Trump, but I also thought it would be contested and we would be a little bit of a time out before we had this melt up. So it's here, it's right now, and we got to deal with that. The good news is the market, of course, is still bullish. We've got seasonality, Santa, and the whole 9 yards, plus my gap fills higher, NVIDIA earnings, etc. So all of this is really pushed forward though because of the dollar. It really does help to kind of put this in view just to see the effect that the dollar is having on the whole shebang. Okay, so I had my doubts that the machine would let this happen. In other words, a Trump win, both electoral and popular. But I was wrong about the contested election. So far, by the way, Harris has refused to speak to supporters last night or to concede. Trump has a sentencing scheduled. Remember, he was found guilty in New York, et cetera, and it is scheduled in 20 days. Yeah, remember that little detail. So if he sticks around long enough, I guess in prison, they joke he can pardon himself. But the point is, this is still a little bumpy, potentially, but it is a very strong payback is a bitch kind of thing. So he's got it. And his team hopefully will stick around in order to make some big changes because we could use them. But the market detail right now is that I did have an expectation that we would have a melt up. I thought it would come after FOMC into the year end. Remember, corporate buybacks are coming in and the whole 9 yards. But right now, there's a knee-jerk reaction that's extremely bullish, the dollar. Markets are euphoric. That's part of it, right? So you can see what's happening with small caps and SPY and Q this morning. Hot fire flames. They are over the top happy that Trump won. And Bob also had a key thought down here, right? Crude is down 1% overnight. I posted this for Bob. And energy equities, right? The Exxons, the Valero, the Chevrons of the world are up 3 to 5%, right? So we talked about this. He's saying to me that a change in government to Trump would remove some of the extinction element. So from the energy equity valuations. And this is really a key theme, the extinction element. Biden administration or Harris administration, what have you, very, very negative on oil and gas companies. This is now off, the boot is off their neck. So I mentioned this yesterday as well. This is the one thing that would happen in the energy space. It might play a little catch up, right? So crude is down. I'm still a big bear, you know that, into next year with oil falling over, and it could actually be an economic stimulus to consumers. I also talked about that. So I'm not scared about this per se, but as client Ann said, hey, if prices aren't high enough, why would drillers drill? Point is, crude is down. Lots of commodities are down. You saw the heat map. It is a very, very clear hot fire flames dollar spike. Now, dollar, in my opinion, is spiking. Okay. And by the way, yields follow the dollar. Stocks are all, up huge. Yen, of course, is down. Bonds down. Precious metals down. Huge. So all of this is because of the dollar. This is all the dollar due to expectations, I believe, of tax cuts by Trump. And they're not yet pricing in all the tariffs and whatever else comes down. But for right now, big, big, big immediate effect on the corporate bottom line is they do not have the tax cuts expire and move higher under Harris. They actually are getting more promises from Trump of further tax cuts. So that's being interpreted, in my humble opinion, as very stimulating to the economy. So you add that on with fewer regulations, just like Bob mentioned about the extinction level being removed from the oil and gas complex. This is also being interpreted as drawing more foreign money abroad to the US. So this is very important to why I believe the dollar is obviously very strongly bid, lack of a better. The fact that we have a very strong bid underneath the dollar versus all the major trading currencies is affecting stocks in a big way. So the dollar right now is up 3% against the peso, 1.7% against the yen, 2% against the euro. Now, the effect of that dollar spike is what's helping yields move higher on also this prospect of a stronger stimulated economy. And at the same time, they still bet Fed's going to cut. So we have even more easing and even more stimulation on fewer taxes, fewer regulations, and more money abroad coming here. So the US dollar is definitely the winner today, in my humble opinion. Yields are following, stocks are absolutely reacting, and the result is yen is down, bonds are down, and precious metals are really hit hard. So I'm very glad that I warned clients about being heavily long gold and silver the past 2 weeks. Silver is literally down 10% since that call. Massive. But I did not expect equity futures would be flying so soon. You know what's left on my one more high that I put out there September 17th and 18th, which is 60.10. Oh my God, we're so close. We left a huge gap below, but we're so close. And SMH 272.46. Big picture, I'm still focused on this one more high. We haven't hit it yet. Seasonality, Santa, and skew, they're all in play telling me that we actually have even more fuel as long as jobs don't disappoint. So just keep that in mind.
Join Club to trade with Samantha. Scan this QR code or click the link in the description. Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.